Pfizer is an interesting healthcare company that had unprecedented circumstances in the last 5 years because of COVID. Revenue and profits surged because of the vaccine. And then, following the vaccine and people utilizing the vaccine during the pandemic, revenue came back down and cash flow profits also came back down. But what about for 2025? Is Pfizer stock a buy for 2025? That's what I'm going to answer in this video, looking at the company's revenue, its cash flow, its return on invested capital, and comparing that all up against the valuation, both in terms of a forward price to earnings ratio and looking at my discounted cash flow valuation for Pfizer to come to a conclusion of whether or not I think Pfizer stock is a buy for 2025. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So I shared with you those unprecedented circumstances for Pfizer. Look at how revenue surged. I mean, this was incredible. Revenue was down close to $30 billion in 2020. And then when they came out with their vaccine for COVID-19, revenue absolutely exploded from $30 billion all the way up to $100 billion. For 3 straight quarters on a trailing 12-month period, they generated revenues of over $100 billion. And of course, now that the pandemic is mostly behind us, or the pandemic is behind us, people are still getting COVID vaccines and updated shots for COVID, but nowhere near where it was right at the peak. But still, the company's revenue at $59 billion is higher than it was before the pandemic. So they're still ahead from where they were in 2018, and they've gained all that experience in drug development and delivery of that vaccine. And so now they're several years ahead from where they were back then. So they experienced a similar trend in their cash flow from operations where it was in decline, and then you had the pandemic, and of course those sales of the vaccine really boosted the company's cash flow here all the way up to $35 billion. That was more than double where it was in 2019 before the pandemic. And their cash flow from operations has yet to recover to the levels from 2018, 2019, as not only the number of vaccinations has declined, but the price premium they were able to get has also decreased since the peak moments of the pandemic. Still, you could see an uptick here for Pfizer's cash flow from operations, and the expectations from Wall Street is that the company's cash flow will continue rising over these next few years. In fact, let me share with you those expectations right now. So according to Wall Street, the company's free cash flow is expected to increase from $10 billion in 2024 all the way up to $17 billion in 2028. These are going to be a result of several new drugs that they will develop and drugs that are already in development, patents that they already hold, and things that they might come up with in the future. Now, one of the areas that artificial intelligence, I feel, could have a huge impact, although we haven't seen that just yet, is in drug discovery. And not just artificial intelligence, that's going to be maybe the next 5 to 10 years where artificial intelligence, healthcare companies will try and incorporate AI for drug discovery and improve the efficiency and speed of drug discovery. But then we've got another undercover industry coming out, if you haven't heard of already, quantum computing. Quantum computing can do calculations in seconds that formerly would take lifetimes to compute. And it can do almost an infinite amount of calculations simultaneously. And so if you're thinking about drug discovery, you're trying to put together all of these different compounds to come up with different solutions to different diseases. If you can apply all the different scenarios that can be potential cures for these diseases and calculate them and simultaneously do these scenarios, that could be something that enhances, speeds up, improves drug discovery. Now, don't expect anything from quantum computing to benefit healthcare in the next 5 years, perhaps. But maybe after 5 years, maybe after 10 years, you might start to see more of that. In the next 5 years, however, maybe artificial intelligence, the increasing computing from AI, these data centers that are optimized for AI, and the increasing computing power could help with the nearer term drug discoveries. Pfizer's return on invested capital also decreased in the post-pandemic era. It's now down to 2.66%. But if we exclude these unprecedented circumstances following 2020, both the highs and the lows here, can see a company that's generated steady returns on invested capital. Not great. Return on invested capital in the, I would say 8 to 20% range over the last decade. So it's not like remarkable returns on invested capital. But when you consider that Pfizer, the way I like to measure return on invested capital is by comparing it to the weighted average cost of capital. And the weighted average cost of capital, my calculation for Pfizer's weighted average cost of capital, which let me share that with you, is 7.93%. So if you're looking at a return on invested capital that's higher than the weighted average cost of capital, then you're gaining wealth as a shareholder. Getting, you're adding shareholder value if you're doing that. Pfizer, it's not clear that they've done that comfortably over the last decade. There have been moments when they did. However, longer term, they haven't demonstrated that they can consistently and comfortably deliver returns on invested capital that exceed their cost of capital. So now let's get to valuation. Pfizer's trading at a forward price to earnings of just 9. This is relatively cheap. The average stock in the S&P 500 is trading at a forward price to earnings of more than double this, or over 20. And you can attribute that to a number of reasons. One of the reasons being that underperformance from Pfizer on their returns on invested capital. That's basically measuring how good the company is at taking investor money, investing it in research and development, which is primarily what Pfizer does for drug discovery. And those processes, how efficient are they in those processes? How skilled are they in those processes? And measuring by the returns on invested capital, they haven't been very skilled in that category. You can't say that they've been incredibly good at that category. So for that reason, primarily, the stock has not generated a premium valuation because the performance hasn't been premium performance. However, a forward price to earnings ratio of 9 is pretty cheap for a healthcare company of Pfizer's capabilities. And if I look at Pfizer on a discounted cash flow valuation basis, my intrinsic value per share came to $129 when the market price is 26. And even if I look at 3 different scenarios with a higher beta for Pfizer stock, its current beta is 0.62. But even if I evaluate it on a beta of 0.75 or 1.25 or 1, they all suggest that the stock is undervalued. In conclusion, Pfizer is not one of my favorite stocks to buy. However, the valuation is incredibly cheap. So because of the cheap valuation, I do have the stock rated as a buy for 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.